All right, guys, we're going into a Friday expiration. We do still get data in the morning, but today's video is, if you've been here for a little while, it's just going to be a little bit different because there are some things that I wanted to talk about at the beginning of this video before we just go deep diving into these charts. So I did make a little list so you are very clear of what's going to go on in this video at the beginning. And then if we make it through, hey, we're going to get to those charts eventually. High volatility and big events, why it is difficult to trade those times and why it is more risky. And this is something we are going to talk about first off in the video, especially in relation to earnings and big data drops, which we have kind of both of those going into tomorrow. Then after that, I really wanted to go over some things that make me a little worried for tomorrow, and I'm actually going to show those off in the charts. There are some signals that are showing here that could cause some potential turbulence in the market, and they are suggesting some things, and we will bring those up in a moment. And then we're going to hit those charts, give you guys those daily expected move for the SPY and the Qs, and then we'll check on some other stocks and give you guys that main takeaway. Checking on other stocks, if you do have expiration going into tomorrow for some kind of trade, just a note that we are putting out the daily expected moves over on Patreon. They're actually already up, so if you want to get those up, you want to pause the video, join the Patreon. It's only $7. You can get that expiration, and you'll get monthly expected moves this weekend. It's a great time to join, but if you do have expiration tomorrow, they can be very, very helpful in making a decision. So I just wanted to shout that out. But the important thing is we have to start, right? Let's get into it so we can get into those charts. All right, let's take a go at this. So right now we are going to talk about that E at the bottom of your screen, right? We're going to talk about earnings. Now on this channel, you probably hear me say it all the time that earnings is a 50-50 flip. And that's truly what I believe because I don't know what data they're going to put out. I don't think you know what data they're going to put out. And if you're an insider, then you have an edge. Well, then what the heck? You should be giving it to us. No, but unless you're someone who has like inside information, you're taking place in insider trading and you're getting data early, it's impossible to know what they're going to put out. So we overall call this a 50-50 flip because you are pretty much coin flipping like, hey, could this be up or could this be down? And I'm going to take my best guess. I'm going to use technical analysis. You can throw those things mostly out of the window when it does come to earnings time. And that's because a lot of the time we use this to get an edge, but we don't know if they're going, what if they absolutely give you terrible news and that falls through the floor? What if they absolutely give good news and that goes to the sky, right? A lot of weird things can happen, and violation of weekly expected moves happens a lot during earnings time. So you have to be careful about that. The other thing I wanted to talk about, right? The second part to this is it's also, even if you're right, it is very difficult to make money in high IV, right? For some reason, everyone likes to trade when volatility, the implied volatility is higher. They see bigger moves and think that that means more money. I want you to understand one thing about high IV. You are paying more for contracts. Okay, you are paying more for contracts, and you'll probably see on other platforms, you'll see a move that is overall priced in, right, for a certain earnings move, right? There's so many options going on. People are like, there's a 10% move priced in. What does that mean? That means sometimes you could actually be right and see this make a move up. But if IV then drops and you actually see this going up at the same time, the price of your option could get worth less, even if you are right. And so what you would need from an overall earnings in order to make good money, which people can pull it off, but it's just very difficult to do, you would need a move bigger than that implied move to happen. Okay, so that's what really runs you into some problems. It is also just very difficult with how implied volatility is. If that actually drops off after the earnings, your option could be in the right direction and just lose money. And I am sure that some of you guys have gone through that before. The other thing that I wanted to talk about here was this right here. A lot of people mention to me all the time, there's a good earnings, but a bad reaction, and nothing bad was said in the call. What if that earnings was already priced in, they have good earnings, and you think you're right, and then it ends up selling off because people had already priced it in, and they're like, this is as high up as we evaluate that to go with those numbers, so we're going to potentially sell that and buy something cheaper, right? There are stocks that have suffered from their earnings, gone down to possibly juicier levels, and that could make them better looking to potential investors while Meta is going to an all-time high. And so these are all things that just show you how earnings, big, high implied volatility, those times can be really, really risky, but also they can be really unrewarding even if you are right. And that is a big thing that we need to get across on this channel. And I feel that the beginning of this video was important to discuss that with you. And we're going to talk more about these things as we go forward because I'm seeing some things that are showing you some risk going on in the market right now. And I think we need to talk about them. some things that are showing me there could be potential risk are the fact that I think a lot of people are forgetting about data and just talking about earnings, which earnings is a 50-50 flip. We already know that that's risky. We already know it is very hard to have an edge, and it's actually hard to make money in it, even if you're right. So we have to be thinking about also something else coming down the tape here, which is data. Tomorrow we will get the PCE, personal income and personal spending. We notice that the core PCE is expected to actually go up. So that is very interesting for this to be forecasted at 0.2, to be consensus at 0.2 in the previous 0.1, because this number could come in higher. What does that overall mean right now? Well, if we take this into consideration with the 10-year yield, we were talking about, right as they're talking about, get worried about rates, get worried about rates. We were just like, watch this. What if this daily divergence confirms? And then we actually see rates go down now. And that's exactly what happened. And we did notice some little things popping up here. But with that data coming in the morning, and something that looks risky to me is you actually have reversal signals right here for the 10-year yield to actually maybe see some kind of bounce here. Now, we don't know how high that bounce could be, but we do see the daily chart, the daily MACD down by the center line. And if that curls up, test this high, go make a new one. So don't think that these rates have to go down right away. We even see, if we're looking at a daily chart and we see a 4-hour divergence, that usually tells us, hey, this thing has a good shot to try to take back that 5-day moving average and even see that daily chart curl up. So do we have that risk right now? Well, if I blow up this MACD down here and I blow up the RSI for you, what are you seeing all across this thing at this moment? We are holding the tapering as of right now, right? Coming down, then tapering off again. And we'll notice that that is creating a lot of divergences. And I'll blow up this RSI because you can see it's holding on the MACD. Look at it holding on the RSI with almost every single point here. So there is risk that the overall downward move for the 10-year yield has possibly even put in a bottom here right now. I mean, we don't have a great confirmation of that at this moment, but if we see some bad data in the morning, which the PCE is supposed to come up already, this could be a big problem. If we see personal spending go up while the income is still coming down, you actually could see an upward reaction from the 10-year yield. And this is something that's worrying me. It's worrying me when we actually go over to TLT, right? TLT is something that I'm pointing out here because you see the exact same signals. When do I pay attention to TLT and the 10-year at the same time? Well, when they have signals at the same time. And everyone's paying attention to this, and that is something to pay attention to. That's the overall bullish case for TLT. That's the way that rates could go down lower. And that could easily happen. But I'm showing you the other side, which I think people need to do more often, is just show you guys some of the risks for tomorrow and why you might be ready to react and make a little plan for tonight. Well, we noticed that that 30-minute actually did give you a good confirmation here for TLT. Just so you're aware, you do see a red little dip right there on the histogram for the MACD, and I want you to see that divergence pointing straight down right here. You can see that pointing straight down, and even if you blow up a 2-hour, you're starting to see that divergence all the way across. So this means that you could end up seeing the daily roll over here, and we just discussed how the 10-year yield showed that the daily actually could curl up. So tomorrow will be a very important day of seeing where this would want to go. At this moment, you do see we're trying to kind of play out a head and shoulders on TLT, but I want to show you how that could fail because I want to pay attention to both sides, and we are creating these basing out signals from the 10-year yield. So I think you need to be paying attention to it. The other thing that started to catch my attention was the fact that the dollar was elevated, and it really looked like we were going to give that up. But then I come back later on and I just go, interesting, because by now we are curling up here. We are curling up on the 2-hour into positive territory. That means that this 4-hour might reject, and we thought that, hey, this thing might see a reaction and curl down off the 5. We just retook the 5 and started to say, hey, we could potentially go in an uptrend here for the dollar, which means that, hey, assets or gold actually could start to head in the downward direction, because when people are going into cash, what could they be doing? They could be selling out of assets. So this most likely could be a sign. And if we're going to see the dollar go up, then we might want to pay attention to GLD. Now, I want to pay attention to GLD, not necessarily on the 4-hour, but on a 2-hour, because I really like these 2-hour charts. And you're noticing that divergence is there. right? But it has not confirmed. So there are some risks going into tomorrow that are kind of telling you, hey, the dollar could see an upward move, gold could see a downward move if this was able to confirm. It has not yet. This is overall bullish at this moment, but if that curls down, it switches immediately, and that means the dollar could start to head in the upward direction, the 10-year yield could start to head in the upward direction, and TLT could actually drop off. So I want you to be very aware of that, and I'm going to show you one last thing, and then we'll get into the SPY and the Qs. All right, stick with me. The DIA. This is the weekly expected move for the DIA. We go up to the weekly expected move. We see all the rejection divergence on the 2-hour. Now, this could be an explosive one. Like, this thing has not pulled back at all. We keep getting these little tests of the 5, but that is it. This did not get the 2-hour pullback that the overall market did, which we were talking about. And now you're starting to hit a weekly expected move at the end of the week as we're testing the highs over here. This is very, very interesting, and you're getting rejection divergence. You can see that plain and simple on your RSI. Why am I worried about this? Well, because DIA is still heading in the upward direction. It hasn't gotten that 2-hour pullback. Why am I really, really worried about this? Well, because if this is going to be some kind of trap at this moment, I would be paying attention to the daily chart. Now, I don't see this as the highest probable thing right now, but I wanted to make other people aware of it because we are noticing that if this would curl down from here and start to go negative and actually beat this low, you would really be confirming like this is the high, this is a lower high, and we were always talking about this, the right shoulder that could have been. As long as we are not exceeding this level, I don't consider that violated, invalid at this point. So if we do see that daily roll over here, we would expect something to happen. And if you see a little bounce from there and you fail that, right, you fail the next move trying to go up, ooh, you might break in the downward direction. Now, is DIA going to be a warning sign? Because the last time that we saw something bad in markets, the DIA was dropping off for a long time. Then the SPY and the Qs experienced something bad. But the DIA was doing that well before. So I want to pay attention to this very seriously at this moment. Is the 2-hour at risk of actually pulling back more? Well, yes, because you have the 2-hour divergence, but I wanted to show you how clearly this looks on the 30-minute MACD right now and the 30-minute RSI, because these are very important things. Ignore the wick for now. We're just going, okay, that is a closing bar below the 9 for the 30. We have not seen the MACD follow. The RSI is confirming it through the signal line. You're holding all. You are holding almost all of the divergence points on the way down here. You are holding all of the divergence points on the RSI here. So you have to understand there are risks going into tomorrow. Hopefully we see these upside moves, right? Hopefully we carve this out. But I just want you to be aware of these things so you are ready to react and understand that in a high volatility week going into expiration, there are some dangerous things. And sometimes it is best to do what I've been doing overall, which is I might take a little play here and there, but overall I am sitting on my hands for the most part. But I wanted to show that off. I wanted to treat that very, very seriously going forward because there were some warning signs. And I even posted that to Patreon, actually. I posted a big thing to Patreon. In that Patreon post, by the way, if you'd like me to read it off for you real quick, it wasn't anything crazy. It was just me saying, hey, let's not forget about the risks going into tomorrow. And that's something that we have to take into consideration when we open up with the SPY here on a 30-minute chart. We do have your daily expected move. Notice we have a pretty damn big daily expected move. You have 610.25 to the upside. You have 599.83 to the downside. We know that 600 is an important level and 590 is a really important level as well for the SPY at this moment. The upside level that's important is 610. So we have both areas really covered by these daily expected moves. But this is something we need to pay attention to. We were always looking for, hey, do we make reversal signals in a higher low or some kind of divergence? And this is overall saying to us, I am going to try to be a lower or a higher low. I'm going to try to take back the 5, and we have done that. Something funky happening at the end of the day, maybe people just getting out of the risk, right? There's a lot of risk going into tomorrow, so it's understandable to see maybe a little sellout or something like that. But at this moment, what was the overall goal from this? Do we remember the overall goal from all of this price action? It was to turn up a 2-hour chart. Did we actually complete that as of right now? No, you did not for the SPY. The 2-hour chart has not curled up. The whole point of us talking about all of this in here was for us to eventually see that 2-hour chart curl up and be able to see that extended move to take us to a new high. And even if that does happen, there could be risk that there is some kind of divergence formed here. So we will be live tomorrow to talk about stocks with you. Now, I just real quick wanted to point out the fact that this has not crossed. So right away in the morning, if I see a 30-minute MACD cross down, that means that this is still close to the center line and this could still go wrong. Nothing is 100% in the market, and that's why overall mitigating risk during a high IV week is an overall good decision. But there is something to react to here if you want to talk simply about it. If the 30-minute does cross down, you're at risk of taking out this trend, you're at risk of taking out this attempted higher low, and you could either go make a new one, maybe try to solidify a new one, make like a head and shoulders on the way up, or you end up taking out this low and going to make a new one. And that would be worrisome at this point because you would not have that divergence to really send you higher. And this thing could be at risk of turning over a daily chart on a Friday, and then bad things can happen over the weekend. So I just wanted to make you aware of the risks of tomorrow and maybe help you in formulating a plan if you are holding on to some trades. And this is why the Qs are going to overall be tricky because they have confirmed up. So the Qs are saying upside is the most likely thing. So what can we look for? Well, we can look for maybe a gap fill, right? A gap fill would be a great thing. 530.05 would add some credibility to that, and that is your daily expected move. This is your 68% zone for tomorrow. We have a 68% chance to land in there by tomorrow. Pretty decent size range there. Then we have 516.05 to the downside, right below the weekly expected move. So that's great. Now, if the 2-hour flashes back down, that's going to be a bad thing, but I'll give us something even tighter. The 30 minutes still is within range. So if the 30-minute curls down, we could violate this. We could actually go and test these levels down in here. Do I think that's the most probable thing ever? We'll have to look how it shapes up in the morning, right? Retail hour, we look for what happens, then we see if buyers can step in towards the end of the day. But I would just be highly aware of the Qs right now and say, hey, if that does end up in the downward direction at this moment, I am at risk of crossing over that MACD. We have had 1, 2, 3, and 4 days below the nine-day moving average. The only good thing you have for the Qs here is it has curled up a 2-hour and it has taken back the 5, saying the 2-hour is suggesting that an upside move is probable, more probable than a downside move at this moment, but that's what trading like water is all about. These signals can change very, very quickly, and I wanted to make you aware of the risk going into tomorrow because all this has to do is maybe go to a daily expected move and then fall again, and you might be taking out this low and going to make a new one for the Qs. So it's just a time to be overall cautious, I think. This is great that we're overall seeing the higher low from the 30-minute here from the Qs, but we can see that that was pretty wonky, and this is there's still confusion going on, and we have a high amount of implied volatility next week. One thing I do want to talk about in this video, and if you stick around for it, GME is super interesting with the amount of implied volatility that's there right now. I think it's something we need to pay attention to, but overall, from this video, I'm just talking about, for the most part, there are times where trading can be more complicated. There are times where trading are more relaxed. This is one of those whole weeks where trading becomes more complicated. I was able to make some money throughout the week, but on very small position sizes so that I was never risking a ton. And there are risks going into tomorrow. And we're seeing some of that risk go into tomorrow for Apple, right? And this is where we talk about the get out of jail free card, right? The 30-minute higher low. We talked about this at the beginning of the week, really on Sunday night's video, saying we want that 30-minute to confirm very strongly above the 5 and see if that can catch a run here before earnings. See if we can react all the way up to 238.50 or 238, right? We've gotten that reaction. We're right there. We might need to make structure to head higher. But if the good news is actually bad news and this thing turns down, we have to still treat that very seriously, okay? Apple's been going down for a while. The most probable thing would be to try to carve out a higher low in this area or retest the 5 and see that head upward. But you're noticing that the earnings for Apple proven to be a 1.69% move at this moment. So even if I took puts here and Apple's pricing in like a 12-point move with earnings. Even if I took puts here, they might be less valuable in the morning because the IV might have dropped off with this, right? So you have to be quick with it. You have to be paying attention and just be like, okay, maybe I try this a couple times, but maybe if you're like me and you've tried earnings a couple of times and it's never really worked out very well, you just go, hey, I'm just going to take a week off from trading stocks and do something else. So, or like me, I traded an index this week instead of trading an actual stock, because there was less implied volatility in the indices than there was in individual stocks, and so that made the options a little bit better there. So one thing I would just be aware of is this 2 hour, if it does cross down tomorrow and then it's able to curl back up, just watch for if you have some structure to head higher, and I do believe you have that structure to head higher for Apple as long as everything can hold. As long as this daily signal can hold at this point, Apple is pointing in the upward direction for the daily. It might just need a period of consolidation here. Tesla, the daily MACD down by that center line, no reversal signals here. So yeah, we're looking for that next upside move, and I still think that that's the most probable thing going forward, but I'm aware of the risks going into tomorrow. So we're looking for that daily MACD. If I'm just sitting on my hands, being patient, waiting for earnings to do whatever earnings wants to do, and then I see a daily curl up, I can go, okay, cool. How's that looking for me? How's the pricing? Right? I can really be patient throughout. But the 2 hour was able to curl up here. Now, why would I be paying attention to this at this moment? Because I think you are at risk of making some interesting things here for Tesla. I think there's a way up and a way down. And I think the way up is you got to take out this high right here. Because if you start to look across, right, it's never going to be perfect, but you look across and you see a 2 hour move here and that fails, that's going to be a big problem, because actually the 2 hour MACD is kind of leaning towards that with the positioning of the MACD at this moment. We have that moment where you could see that curl up and then see some positivity come in, run into a daily expected move, and then people just start to sell the thing. So you have to be worried about that. That's why I think the bullish thing would be you got to take out a level of about 437.34, and if you curl down at any point before then, this thing actually could see more downside and end up down towards 357.78. So you got to be a little bit cautious with Tesla. But for now, you are taking back the 5-day. Your 30 minutes trying to go pretty positive here. If it could go through some more positivity, I'd feel better about it. But if this thing even wants to pull back, that could make a divergence first. Like, right, we were looking at the divergence for Tesla. Very, very nice here. Nice little upward move, but then it completely fades. So just take into consideration the risk of trading during earnings week. I think Amazon would be a great one to keep on your radar, even if you are not going to trade it, for the actual state of some of these stocks right now, because Amazon is super high up. Once again, their earnings are coming up. What if this is all pricing in the earnings and then the earnings comes out good, it makes a little upward move and falls off, like Meta might do here in the near future. So one thing I would be very aware of for Amazon and why I would keep it on your radar is because it has very clear divergence on the daily chart. It has very clear divergence on the 2 hour. It has very clear divergence on the 30 minute, but the 2 hours is what I want to talk about right now. We see that actually confirming. That does suggest that the daily is at risk of turning down right now. So just be aware of that, and you have divergence on the daily scale. So just be cautious with it. If this thing is able to curl up into positive territory with this 2 hour again, hey, then we got to violate those divergence points. If we just see this go bloop like this and then cross back down, you might get a triple one. So now you kind of see the risk of stocks that are up really, really high, and then they get earnings and these evaluations come out, and then people start to go, oh, well, you know, this is pretty much priced in as of right now in the price for Amazon. So maybe I'm just going to get out of that and try to get into something else. So that's what we'll look for at this moment. And you're still at risk that the 10-year yield is going to turn around. So Amazon would be a good one to have on your radar. If the 2 hours is able to curl up, you can see one more upward move. We have daily expected moves for it over on Patreon right now. I would suggest pausing the video and getting those up on your charts. But you see this plain and simple right there for your RSI at the same time, daily divergence on the MACD and RSI at the same time. It just tells you there is a lot of risk for Amazon in this area. And if you really want to think about this simply, right, sometimes we just think about it simply and try to use common sense. Okay, if I take a call from right here, the upside I should expect according to my Bollinger Bands is about that. But the downside I could expect from my Bollinger Bands, the risk, if you will, is all the way down to 213.52. So the risk to reward here from Amazon looks rather small for this daily chart. And this is what I'm saying. A lot of those stocks, Nvidia might look like an okay price to people now, right? You've already had this. You had like a big upward move that kind of faked people out. We had a weekly expected move there. Thank you for weekly expected moves, Nvidia. Appreciate you, buddy. But right now we want to see what's going on here. And if this is really piling up, it's piling up for a big move in one direction. We want to see which way that is going to go. As of right now, your 2-hour chart is suggesting that that move is going to be this way. And we were talking about this being a higher low. And you're starting to see how some of those Meta and maybe Amazon, they start to say, ooh, that's a little pricey now for that evaluation. But Nvidia just dropped off and they don't have earnings for a little while or something like that, right? You might see that actually happen. And we're actually noticing in the 30-minute that this thing is looking all right. So if this 30-minute curls down, it is still in negative territory. That means worse things can happen. But if this is going to be a good move and we take back the 5 and start to continue to make those series of higher lows, we can build up to this gap fill at this moment for Nvidia. As of right now, though, you do have to treat Nvidia very seriously. This is something I wanted to discuss when we got to Nvidia. The weekly divergence is here, okay? The weekly divergence did confirm. This is showing weakness as of right now. We are seeing it still kind of coiled up, actually. You didn't really see these Bollinger Bands spread out. You saw them actually get tighter for a moment here. So treat this very seriously because this signal is what you see a lot of the time before you curl over a monthly chart. And I don't want us to forget that if we ever see stock market crash signals, we will point them out, and Nvidia is showing that signal. It will have to get rid of it pretty quickly over the next couple of weeks in order to not continue to fall in price. Now, Meta, is it all over for Meta, or is it just, hey, the earnings might be too much now, you know, this is a great stuff, we got great numbers, but the earnings is just, you know, this is too high of a price for Meta at this moment? Well, the good thing is for Meta, the 2-hour has no reversal signals, right? This does not look like Amazon right now that says it's going to collapse or anything like that. The daily chart is even saying, hey, I'm violating divergence, I'm only holding this divergence point, so I'm not overly worried about it. But the 2-hour could just be in a pullback, right? We could see some kind of 2-hour pullback. We mentioned this before Meta earnings. Hey, watch out, because Meta earnings could come out good and you just see this pop up and then fade because the evaluation's like just not matching up for the price right now. Or it's already priced in. So if this 2-hour can pull back and turn back up, that's pretty much what I'd be patient for at this moment for Meta. You're hoping that remains at higher prices and turns up, or it can see a mean pullback and then end up crossing in the positive direction one more time. And we're going to keep it real simple for Meta because at this moment, we are mainly just looking at a 30-minute and going, hey, if that makes a divergence point with the earnings, and it did violate one, but it's still holding the other. So there could be some weakness in momentum here. The 2-hour looks like it's in dire need to pull back. You see divergence on the 2-hour as well in the RSI, right? That's why we look at the 30-minute to see it a little better visually. 2-hour pullback looks very likely for Meta at this moment. It's time for AMC and GME, still paying attention to the same things. We do have daily expected moves for AMC, a lot of implied volatility for AMC, and we're still waiting for this 2-hour to actually be able to curl up, take back the 5 and take back the 9. I would keep my eye on this tomorrow. And there's one reason that I'm mentioning it, and still you need to break through 379 to see something crazy this week. Make sure you're subscribed so we can update you the updated level on Sunday. Okay, but I wanted to talk about this because AMC has a ton of implied volatility tomorrow, almost 200, I think it's like 150%. But this is where it gets fishy. GME just gave us the same reversal signal, a 2-hour divergence on the MACD, on the RSI. It's just this one's actually curled up, right? This one is saying it's go time. This one is saying, hey, I'm taking back the 5, I'm flagging out, I might continue in the upward direction and end up curling up the daily, which is pretty damn close to positive territory, which means GameStop could be gearing up for a big move. Now, you'd have to break through 29.89 to see something crazy this week. We're going to update that level next week. But the reason, and I just burped, I'm sorry about that. The reason I wanted to talk about this was because, yes, AMC has an implied volatility that's pretty big, right? It's getting a big range for tomorrow's daily expected move. But I wanted to talk about GME because remember at the beginning of the week, I was saying this is really weird. GME has the lowest implied volatility this week that I've ever seen since we've paid attention to it, right? Pretty much since Roy and Kitty came back, we started paying attention to it. And now we're watching it right now as it has a reversal signal. You want to know the best times to get into GME. It's actually at least with one of these signals, and then you just make sure something goes, like it's always going right. Whenever you see a curl down, you have to treat it very seriously. So if the 2-hour crosses down, that can be a bad thing. What if this doesn't cross down tomorrow, right? Everyone pays attention once again to GME. When it has high implied volatility and huge moves, they see a huge move coming and they're like, wow, I want to catch a huge move. What if it's the opposite story, guys? Because right now, I'm going to go double check just to make sure, because this is kind of wild. Yeah, it's still there. GME tomorrow has only a 56.5% implied volatility as of right now. That is wild. I've never seen GME with a lower than 80, I think 80% daily expected move on a Friday. I have never seen GME with a lower than 70% implied move, implied volatility for a weekly. And now we have sub 70 for the weekly and sub 80% for the daily. I would be watching this. If something surprising happens to GME tomorrow, this thing could see something because no one is expecting it. I'm not saying something has to happen. I'm saying if something good, if some big buyer steps in that no one expects, if some kind of news drop happens and no one expects, this would be the perfect time for GME to see a big run. And I wanted to point that out to you guys. And you also have the reversal signal to back that up. To talk about volatility, one thing that we always said to be watching, even if we do drop down and maybe even go fill this gap and do all that stuff, watch if the 2-hour crosses up. It is still within range of going positive. Now, I still think if we do curl up again here, I think we could set up that lower high, but I want to be very cautious going into this. And there's one big reason I want to be cautious, right? Volatility is measuring the puts and calls a month out, right? So what are we measuring? Well, we're looking at the CPC. And why do I want to bring up the CPC right now? Well, because if you're checking out the CPC, you're noticing that over the last 1, 2, 3, 4, 5, let's see, -6, so not that one, but 7, 8. You're looking at 7 of the last 8 days. You had the lowest readings in calls in a long freaking time. Okay, you have back-to-back low amounts here, meaning a lot of people are taking calls here. And this is something very interesting because if we see this spike up, something bad happens and that spikes up, that is a reversal signal. It does say that we could drop even more. So this is something I would really be cautious about at this moment. But I just wanted to point that out to you, especially at the end of the video, because you're someone that's watching it. As of right now, the daily scale is still curled down. I do need to actually put up a 200 here because I did take it off for right now. But you'll notice that we are getting another closing below the 200. Now, that is a big deal. You're closing below the 50, you're closing below the 200. But what is a crash signal that we pay attention to when the 50 is able to cross through the 200? Is this 50 way down here? Is it way down here? Or is it right there? And if you just get 2 days of volatility, this thing is going to be crossing, and you could see a crash indicator flashing red to you right now. So this is what I really wanted to make you guys aware of at this moment. As of right now, the signals are suggesting, hey, the 30-minute has some form of divergence happening at this moment. You're getting some slight divergence in the near price action. You don't necessarily see the big divergence across at the same time. You're not seeing that on the RSI at the same time. So kind of take it with a grain of salt, but just be aware that if the 2-hour does cross up, that means volatility can come back tomorrow, and you need to be aware of that. So the main takeaway here is there are always risks in the market, but when you have a high IV week, it sometimes is worth it to just sit out for a bit or wait to see how that week plays out and then make a decision next week with some kind of signal when IV is a little bit lower and things are a little bit easier. I think we need to still be paying attention to both directions as the SPY has not fully confirmed the 2-hour next move higher. And even if that 2-hour move does go higher, we got to be watching out for divergences in the morning around that 610.25 level in case this is going to give us some kind of topping signal. It's a wild, wild time. I love to trade in wild times because usually you won't see IV even this high. Even in a bear market, you'll see IV high, but you won't see it this high where people are guessing every single day back and forth. So a lot of calls have trickled into the market. It's just a risky time. And I want you to be aware of those risks and just say, hey, if none of these things happen, I have nothing to react to. But trading like water is a great thing, and it's exactly what we do on this channel. I am not going to sit here and blow smoke up your butt and be like, yes, everything looks great. No, there are some things to be worried about going into tomorrow, and that's why I'll be live in the morning to watch this stuff with you. So thank you so much for subscribing and turning those notifications on. I appreciate you guys being a part of this community. I really do, and that's why I'm taking this topic very, very seriously. I respect you guys. I think you guys are great traders. I think you guys are, if you're not at this point, then you're on the learning path and you're asking great questions in the chat, and I really appreciate that, but I want you to be aware of the risk going into tomorrow. So I'll be live in the morning so we can discuss more of this. If you want to learn any of this stuff, why I'm talking about these certain things, or how to find actual reversal signals around weekly expected moves to trade, the course is 90% off, and that's going away this weekend. So get it while it lasts, because you know, it's going up by 400%. So you got to get it while it lasts for $100. Thank you guys so much for watching this video. I really appreciate it. All I hope to do is be helpful, and I hope to be helpful live tomorrow morning. Peace out.